Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on today in the markets? Well, they're up a little bit. Dow's up about 100. Nasdaq's up about 100. We're having a little bit of this rally still. We were sitting at the 380 level on the SPY, and now we're up to like the 388, 389 level. Now, I think this rally still has a little bit ways to go. I do think it'll get to the 395 or the 400 level. But I do think the rally is going to come to an end at that point. Now, how do I know that? Well, I look at the VIX. Now, the VIX, if you go out a couple weeks, the VIX Volatility Index, the VIX, the option prices for the calls are trading out about 3 times what they are for the puts for the same current strike price. So about 3-to-1 ratio. This means that they're expecting volatility to return to the market, and then the market will come back in. So this rally is going to end, and it's going to end relatively soon, but maybe we can get it up to the 395, 400 level before we start to go lower, and I hope we do. I'd actually like to see it above the 400 level so that I could get a better, stronger position going short, because I do think the market has a lot more to go to the downside. Now, of course, this is just my opinion. You have your own opinions, but that's my take on the stock market. Let's move over to the real estate market. All right. So I like reading the articles. You know, the ones that come out on Yahoo Finance. Anyways, the housing sentiment for the new year is up, and I think that's good. You know, people are positive. The new year started and the sentiment is higher, right? Okay, just in the last month over month, we went up 5 percentage points. Now, people a month ago thought that there was only 16% of the people thought it was a good time to buy a home. Now, we jumped up from 16% to 21% that thinks it's a good time to buy a home. Now, you got to understand, that's a relatively low number still, right? That 21% is nothing. I mean, that's like, 70, 80% of the people think it's a bad time to buy, but the sentiment is starting to creep up more positive, right? All right. So a lot of people, the reason they think that the sentiment is positive is because they think that interest rates are going to come down. They think that the Fed's going to pivot and bring interest rates down. People think that's positive for the housing market. Historically, that is not positive for the housing market. That is where the crash actually starts to take place, when the Fed pivots. You go back to 2008. The Fed pivoted in 2008. Took 4 years for it to bottom. So once the Fed pivots, you still are probably going to have another couple of years of a down market in the housing market. But if you read this article, I mean, they would think that, that it's a great time to buy. They'd probably written by a realtor. That's what us realtors are taught to say. It's a great time to buy. But you see, the reason rates are high is that we're fighting inflation. And people don't really understand that inflation goes in waves. Now, we've hit that first wave of inflation that went up to 9% according to the government. I think it's much closer to 20%, but we'll go with their figure of 9%, and now we're starting to come back down. Now, this wave could get all the way back down to 2% before the next wave comes. Now, I don't think it's going to get that low, but it's possible. It's possible. We're seeing prices come down in the car market, in the housing market, and this will bring the inflation number down. Now, will it get down to their 2% before the next wave? And the next wave will be higher than that 9%. So, yes, mortgage rates may come down temporarily, but I do think they will be higher at the end of this year. We're in January now. I think by the time of December, you're going to see higher mortgage rates, 8, 9, 10%. A lot of people disagree with that. A lot of people go, Mike, our country can't handle that. They can't handle raising the rate up to 5%, the Fed funds rate. Well, because we can't pay off our debt. We got 31 going on 32 trillion in debt. By that time, we'll be about 35 trillion, because we keep spending money we don't have. We got that $1.7 trillion spending bill. That's money we don't have, and so that's going to put us farther into debt. So we'll be about $35 trillion in debt at the end of the year, and if we're still at 5%, we're not going to be able to afford the interest payment on the debt. So a lot of people say we can't go above 5%. I think they're going to have to go above 5%, or you're going to see that inflation run away in the second wave. We've had the first wave starting to come back down, but there's a second wave, usually a third wave, sometimes a fourth wave. Inflation comes in waves, and that's going to put pressure to raise interest rates higher. But yes, temporarily, people could be right. We could get a little reduction in the mortgage rate, and maybe that would why people are getting more positive on the housing market. That's a possibility. Now, another article I was reading, which is along the same lines, it was about Wells Fargo. Now, Wells Fargo, they come out saying there's going to be more layoffs, right? And they come out saying that they want to reduce risk in their mortgage business, and they want to reduce its size and narrow its focus. Okay, so what do they really mean there? Well, what they mean is they're only going to give a mortgage if you're a customer of the bank and a very good customer. Then you'll be able to get a mortgage from Wells Fargo. See, Wells Fargo, they want to shrink the size of their mortgage division. They're laying the people off. They don't want to give mortgages to people they don't know, because why? Why are they doing this? What do they know that other people don't know? Well, they know that what happened in 2008. They were kind of the bag holder back then. Wells Fargo carries a lot of its own mortgages, mean they carry their own paper, and then they were the ones that had to go out and foreclose on these people or do a short sale. They did a lot of short sales. I did a couple short sales with Wells Fargo, and the short sales basically were the borrower, let's say they owe them $1 million, but they don't have the money. So Wells Fargo says, all right, we'll take $600,000. They take a $400,000 haircut, right? So they were the bag holder. They lost a lot of money, and they had to come and get that federal bailout, because when banks lose money, who pays? Well, the taxpayer pays with the federal bailouts, right? That's how it works. Is these banks, they're too big to fail, right? Can't let them fail. Of course not. All right, so Wells Fargo was the bag holder in 2008, and they see that coming again. Now, a lot of people don't believe that that's coming. Well, think about it. In the third quarter, they were down over 50% of their business was down in the mortgage industry, all right? So the mortgage industry dropped 50%. But now the whole real estate housing market is down 50%. Now, I'm a real estate broker, and sales are off 50% in my area. Now, of course, your area, everything's still normal. Everything's going along. But in my area, we're down about 50%, and that's almost the national average now. House sales, it's kind of like a big freeze has hit the housing market, right? We're frozen over. Nothing's moving. No one's buying it. And well, if no one's buying, you can't sell, so no one's selling. That's my point. That's my point here I want to make today, that a lot of people don't understand. You see, housing market, well, the price that the houses are selling at is on the margin, right? It's the next seller. It's not what you sold at. It's not what they're selling for in the future. It's the current seller, right? All right. So it's priced on the margin. Now, right now, the margin isn't moving because it's frozen. It's frozen over. No one's buying, no one's selling. Well, what happens when people have to sell, when they have to get out, when the recession hits, when they have no job, they can't make their mortgage payment, they become a forced seller. That gets forced onto the marketplace. And if you don't have any buyers, what does that do to the price? Well, it lowers the price. Now, that's the one that's at the margin. Now, does it lower the price for all properties? Actually, it does. That would be the comparable that all properties in that neighborhood would be based upon, because that's the most recent comparable, because that was the one that was sold at the margin. The one at the margin, when forced selling comes in, is going to be lower. The reason the forced selling is coming in is because there's going to be between 2 million and 5 million people laid off this year due to the recession that is imminent at this point. A lot of people would say we're already in a recession. Well, maybe we are, and maybe we're going to go to a much deeper recession. Maybe we're going to get that D word. I don't want to say it, but we could hit a depression at some point. Now, people will tell you I'm crazy, but when you get forced selling, you're going to see these prices really start to come down. Now, people say there's no inventory in the housing market. You don't need inventory to have a crash. If one person has to sell and there's zero buyers, you have a crash, because the price will drop till that point where that one person is selling. That's just the way it works. That person has to get out. He doesn't have a choice. Maybe he's going through a divorce. Maybe he lost his job. Maybe it was a death in the family. Something happened that put him into the forced selling. And that is the one that's at the margin. That is the one that determines the price for the whole neighborhood. he's going to have to sell at a lower price than Billy Bob got. Now, everybody wants what Billy Bob got. Now, it's funny to me. Okay, so here's the thing. 50% of homes that are being sold right now are being offered concessions. Now, what's a concession? It'd be like giving you, here, I'm going to give you a concession, 20 grand to put on a new roof. So I'm going to leave that money in escrow. All right, you don't have all your down payment. Well, I'll pay 10,000 of your down payment and I'll put that in escrow. I'll leave that in escrow. But we'll still keep the price at the same. Now, okay, loans are expensive now, right? 7%. 7%. Well, you can't afford 7%. Let me buy that down for the first year. I'll spend 10 grand to buy it down to 6% for the first year for you. So these are concessions. And a lot of these homes, $40,000, $50,000, $60,000 in concessions. Now, why they give concessions? Why not just lower the price? It's better for the buyer if they just lower the price because that determines his property tax. And that property tax doesn't change. It never goes down. It only goes up, right? And that's where you buy the house at. It determines the property tax. But the reason they give concessions is because they want to say they got a price that was close to what Billy Bob got. They don't want to say that they had to sell at this low price. No, they sold at the high price, but we gave $50,000 away in concessions. Now, 50% of the homes right now, that's what they're doing. They're giving concessions. Now, if you go to new constructions, it's about 100% of homes giving concessions. Now, why did new construction have to do it? Well, because someone had already bought a house in the subdivision. Now, if you paid $1 million in the subdivision and your next door neighbor comes in at $900,000, you're not going to be very happy. Matter of fact, you might even consider suing the builder. So the builder has to keep the prices all the same. They have to keep them at $1 million because that's what the first guy bought at. So they got to keep the next one at $1 million, next one at $1 million, next one at $1 million. Now, along the way, they're throwing in the kitchen sink. Maybe they're building a swimming pool in one guy's yard, but it's still $1 million. Maybe they're buying down the loan for 50 grand, but it's still $1 million. You see, they give concessions so they can keep that $1 million price so the people that bought early can feel like they got a good deal because they got the same as the person that bought late. But on the resale homes, a lot of the people, they just want to give concessions because they want to say they got out at the same price Billy Bob got out at, but we know that Billy Bob sold at the top, so they did not get out where he got out at. And if you don't get out now, you're going to be doing a lot worse because this is a downward spiral. It's a big freeze right now. Not much going on, and I'll be the first to admit that. Everything's slow right now, right? Things aren't turning over because nobody's buying, nobody's selling. But once that forced selling comes in as the year moves along, as those layoffs come in, as the recession hits, then that's where the activity comes, and the activity will be that elevator down. You see, we did that stair step up, but that elevator is going to be down. When that forced selling comes in, yeah, it's at the margin. Remember, it's just that one guy that has to get out, and there's no one to buy his house. He's got to drop it until someone is available to buy his house. And that's going to make these homes more affordable for everybody, right? But we're in this house of cards, and it's going to come tumbling down. Now, nobody believes it's going to drop 50%. I think that number still may be conservative because we went up 40% just in the last couple of years. So 50% really is not that much. I actually deep down inside believe that we're going to get back to the 2012 levels. Now, what if we even overshoot that? People think that's just ludicrous talk, so I'm going to stop it there. I don't want to get carried away. I might depress somebody on a Wednesday. Anyways, get out there, everybody. Have a great Wednesday. Don't forget, give me that thumbs up. Punch that subscribe button. I want to talk more to you. I'm Tall Mike. Bye-bye now.